Good evening, everyone. Thank you so much for joining in, especially on a Sunday. This is an exciting opportunity of an existing property which we own, and this will give us the ability to own the entire building, uh, which is the Bangalore Office Opportunity too, as such. So, just right jumping in into the opportunity, it's about a 72,000 square foot additional area which we are acquiring. So, overall, our acquisition would come to about 1.3, 1.4 lakh square feet of this building. We existingly own this facility. We bought this in August 2021, and we are doing this transaction again after 2.5 years in this transaction. So, it's situated in a prime locality, and we'll go about the entire location. But from a highlight standpoint, we're entering at about 9.02, including the top up. We've got a fresh 5-year lock-in and a 15-year lease with a global sportswear brand who's our tenant for this particular opportunity. And the property is within 300 to 400 meters from the closest metro station as well, which is a very important criteria for large metro cities as you move forward in terms of how close proximity it is to metro. The leasing ability becomes much easier for later. And obviously, the rents are also relatively would have a 10 to 15% kind of an extra delta vis-a-vis a property in the same vicinity, which is a little farther away from the metro. So Indian office has seen tremendous demand in the last year. It still hit record highs with respect to its total capacity. As such, in terms of leasing, obviously led by BFSI and technology, which were your largest occupiers, and very new markets came and became, second, third occupiers with respect to its maximum demand. Like Chennai has seen tremendous uptake in office leasing in the last year. Obviously, Bangalore leads, the entire leasing capacity in the Indian office market as well. So demand for office will continue. That's what at least our view is, irrespective of whatever slowdown happens. India is poised to have multiple GCCs who are looking at setting up shops in India because of the talent pool which is available. But no longer Bangalore is the only option. Today, there is tough competition to Bangalore from Pune, Hyderabad, Chennai, and of course Gurgaon as markets who are looking at, taking offices over here. And with time, Gift City, especially with the newer changes and regulations coming around the corner, we are hopeful that even Ahmedabad would be a great driver for office demand as we move forward. So location overview, Bangalore is still the largest office stock market, close to about 190 million square feet of grade A office stock available. Obviously, it attracts the largest talent pool of technology, IT people over here. The number of unicorns also are almost 50% of all the unicorns. It's also a startup hub, and hence the requirement for large offices continues to be there, and it is a great location. But what Bangalore has seen in the last 1.5 years is also about the demand for residential has substantially gone up purely because of more and more offices wanting to set shop and more urbanization happening in Bangalore, which has its own crisis coming along with it, which requires planning, etc., which I'm sure this government is thinking about on how to solve those things. So key micro markets, the biggest micro market is the Outer Ring Road, Sarjapur, Bellandur, and your Whitefield, which is almost 60-70% of the entire office market, which has the REITs also having their largest stock in this particular market, which continues till your Hebbal, Manyata Tech Park, etc. So that entire Outer Ring Road is the darling in some sense with respect to the grade A office stocks which is available. Our asset is also located in that similar micro market, which is Whitefield and Outer Ring Road micro market, which has, like I said, home to most of the Fortune 500 and GCC companies, whether it's Cisco, Accenture, JP Morgan, Goldman Sachs. Everybody has their office within this proximity of Bangalore. So just new snippets. I mean, we have been seeing tremendous amount of work from home, which was an earlier phenomenon. Many people have come forward and has told that they would like to enter office again. I think TCS, Accenture both made a bold statement of calling all their people back. TCS predominantly as such. So despite the work from home, office leasing demand has been very, very high from most of the occupiers as such. And share of GCC is the maximum. Which means more companies from abroad are looking at setting up their global capacity centers, innovation centers in Bangalore. And Bangalore is the most favorite office space market for everyone. Our property is situated very close to a metro station, which I was mentioning. It's about 400, 500 meters away from the closest metro station. Just further down the metro station is Phoenix Market City, which is again one of the second largest mall, thanks to Phoenix Mall of Asia, which is now open. So that's the mall and one of the malls for the entire micro market, whether it's Outer Ring Road, Whitefield, etc., where most of the IT people stay. That is probably one of the only malls which is available. So our property is just about 600, 700 meters away from that particular mall. So for those who know Bangalore, who know Phoenix, property is in walking distance from that particular property as such. There is a link road which connects Outer Ring Road to Mahadevpura, which is the starting point of Whitefield, and then another 4, 5 kilometers down is where you get your, Prestige Shanti Niketan, ITPL, and other, marquee properties as such. So that is where this location is. Again, very close to KR Puram railway station. It has a metro as well. But KR Puram is one of these center points for a lot of trains which go to Chennai and other parts in South, etc., from Bangalore. The tenants within the vicinity, the property which we own just about next to the property. In fact, we share boundary wall with HP's only campus. HP owns its own property. In fact, they've made additional million square feet, which I believe they're not requiring more than half, and the other half they have now leased to multiple tenants like WeWork, the math company, Impulses, etc., upwards of 65, 70, 75 rupees per square feet as well. But apart from that, Bagman is tech park, which houses more than 10, 15 million square feet of office stock, is again just within 1 kilometer radius on Outer Ring Road, which has your Accenture, Microsoft, Qualcomm, Samsung, Honeywell, etc., as their offices. And on the Outer Ring Road on the other side, sorry, on the Whitefield Road on the other side, you have Capgemini and Airbus and other, multiple tenants who have their offices within the close proximity. So this is a hardcore GCC favored market for a lot of occupiers, and it's great for us to be a participant to that, because leasing in general from a future standpoint as asset managers is relatively going to be an easy task in general. Just the recent leases which have happened with Morgan Stanley, with Techion in Bagmane Solarium City, which is again just about 1.5, 2 kilometers away from our particular property. Fresh commitment of multiple large companies and large capacities, what these guys have been picking up. In fact, Google also just finished their building. They're doing their fit outs, which is again very close to our property. So Google's million square feet, which Bagmane had built, is also about 1.5 kilometers from this particular proximity. So this is a 15-story building, out of which we had already acquired about 7. We are now acquiring the balance 8 floors, which includes the terrace and the mezzanine. It's part of the sanctioned floor. So the total acquisition post this acquisition will be about 1.5 lakh square feet. This property has an attached hotel as well, which is being acquired, not by us, but somebody we know of, who's also acquiring the hotel. But we'll be having control and management of the entire facility as such. The hotel which is coming is Hyatt Centric, which is about 212 key room business hotel, is this particular opportunity. So the phase 1 opportunity which we had acquired included the ground first and the 11th to 15th floor, which houses, I'll speak about it later, what all is getting operated. But from 2nd to 10th is now the acquisition which we are making as of today. The typical floor plate of this particular opportunity, pretty much similar floor plates, barring few floors which has refuge or other fire exit norms, etc., to be mentioned. But pretty much the entire floor plate is of this nature. Just the images of the property, how it looks like. Like I said, we acquired in 2021. The tenant has been occupying this particular property for the longest time. And he's taking additional floors and giving us a fresh 5-year lock-in, which clearly gives that the one which we acquired in 2021. And for those investors who acquired with 2021, they'll automatically get a 5-year lock-in of sorts, because nobody's going to leave their few floors and continue on their few floors. They will ideally look at leaving the entire building together in the event they would like to leave this building as well. So the Tenant is a global sportswear brand. This is now their registered address of their office as well, and their headquarters. The top 5 floors is their studios, where all the new product launches or whatever they do gets launched over there, or part of the studio which works on those things. The other floors which they're acquiring is expansion of their existing office for e-commerce and other businesses, but also for their GCC, where they are moving a good chunk of their technology arm from abroad, which is from Europe to India, and they'll be setting up their operations over there. So Puma has multiple brand sponsors, which is Virat Kohli, Kareena Kapoor, etc. These are their brand ambassadors in India. Terms and financials, it's a fresh 5-year lock-in, 5 lease. The lease commencement is April 24. As such, our rent per square feet is 59, vis-a-vis the market rents, which are at about 70, 75. In fact, you go to Outer Ring Road, it touches about 90 to 100 as well. So it is super under-rented, which means the stickiness of the tenant will be longer. Probably an opportunity to stick around for a long duration, or a 7 to 10 years is a great time frame for us to look at, taking an exit from this particular property. But having said that, looking at the proximity, looking at the kind of commitment has done in terms of its interior investments and how they are looking at this particular operation, and we sharing boundary walls, part of the same campus with another four-star hotel, it is a very marquee building for us to probably retain for a long duration as well. So the lock-in is 5 years, lease period is 15, and there is an escalation on the lease rents, which while the rent per square feet is about 59.9, but the rent for the entire base rents is about 52.8 rupees. The other rent is tenant improvement for certain additional investments which the tenant wanted to do for that. So escalation is only on the 52. So net is about close to 13.5% every 3 years, but otherwise on the base rent it's 15% every 3 years. The rent what we're talking about. So the gross purchase price is about 54 crores with all the other legal fees and reserves which would be maintained. So we're acquiring at about 8,193. Our last acquisition was about at 7,400, 7,500 in terms of that. So we're getting at a good value, looking at market trends which are at upwards of 9 to 10,000 today. So because this was a pre-commitment from us when we had done the phase 1 acquisition that we will be acquiring the phase 2, we're pretty much getting at similar escalated numbers which we had agreed basis when when we will be acquiring this particular property was what these terms is. The gross purchase price includes stamp duty, includes share transfers, for money to be paid for acquisition of the shares and etc. So it's an SPV transfer, which is what we'll be doing, similar to how phase 1 was. It's going to be the similar transaction, and hence the gross purchase price is all inclusive of all the costs which are going to be included for acquiring this particular property as such. Financial model, again, we have estimated an exit timeline of 7 years. For existing investors, it will be about 9 years from the time they've invested as a time frame for us to consider exiting, which would give us about a 14.2 kind of an IRR. Again, our financial model is very simple for investors. You can plug in your amount, what you're looking at investing, the appreciation you feel it can achieve. We feel 7 is a great number which we can achieve conservatively, purely because the property being under rented, it having a hotel attached, which is going to be operational by 2025 October, another 1.5 years from today. With the entire ecosystem, how it has been building up in and around this micro market, we feel we could hit a 7% kind of a annual appreciation, which would give us about 14. Even if we are at 5 to 6, we'll be at 12 to 13, 13.5% in terms of our IRR returns, which we would expect for our investment returns as such. Rental yield, again, like I said, it's an escalation every 3 years. So just that in the 10th year, when the tenant improvement rent goes down, then your 10th to 15th would have a lower escalation comparatively as such. But otherwise, it's a 15% every 3 years on the base rents of 53 rupees as such. Again, just showing you the growth and the multiplier sensitivity as such. So why we are excited about this, obviously it gives us an ability to manage the entire property as such, number one. So it gives more control for future leasing in the event the tenant walks out from the particular property, number two. Second, this is an existing tenant which we are managing. We've had a great relationship with them. The company has also seen soaring numbers in the last 2 to 3 years, ever since we've acquired, with respect to how their performance in India has been as well. So that's also another key reason why we are very gung-ho about this particular opportunity. Third is the location. It's a super strong micro market, and especially with the hotel, which would be operational within 12 to 18 months from the time we acquire this particular property. From April, we see the value only going up because very rarely you'll find the hotel having a office associated with it, and the entire management of the property, the common area would also be done by the hotel eventually once these guys move in. So that's a precondition which we have agreed with the tenant and the hotel as well. So that's going to be the other thing. So in terms of quality of maintenance, in terms of whatever service which is required to the tenant or to our occupier, it'll be top notch vis-a-vis any other building in this micro market. So the terms for investors is 30 lakhs instead of 25 because the opportunity is close to about 60 crores. So hence to keep the maximum of 200 shareholders, which is allowed as per Companies Act, it's going to be about 30 lakhs. We're giving a rental top up, which we do always for people who commit early, and a management fee, which is a standard management fee, which would be having for all the investors. Just a quick through about Strata, and then I'll jump into the Q&A for all the investors in general. So we today manage just a little over about 1,600 crores in terms of our AUM. The last acquisitions which we did in India was our CCD property in Bangalore. We acquired the headquarters. Prior to that, we had made a significant investment in Koramangala, where we are doing a build to suit for a very large insurance company, where we deployed close to about 335 crores through our platform. Prior to that, we had done a large acquisition again, close to 500,000 square feet in Pune as such, and multiple other opportunities as such. So our portfolio is against one of the most diversified portfolio where we have close to 40%, which is non-office, which is industrial warehousing, and the balance in office assets across. Again, we've invested across multiple micro markets, so we've not stick to one micro market and are looking at expanding in other markets. And now we are entering into healthcare very soon, which would also be a large portfolio as we move forward from a business standpoint as such. Just the tenants in our portfolio, which we have all marquee names, all grade A clients, right from a UBS to Saint Gobain, Havells, etc. These are all clients in our particular. Just a little bit about our management team. We've been backed by Elevation, which is a very large VC fund in India, has close to $4.5 billion in AUM. With Kotak Asset, alternative asset manager, again has close to $18 billion in India. Mayfield is a very large US-based company. Early investors of Lyft, which was a competitor to Uber, and in India with Bharat Matrimony, Licious, and other players as such. And Gruhas, which is a VC firm focused on PropTech investments by Abhijit and Nikhil Kamath of Zero Bets. Just quickly about us, we have 4 offices now. We have an office in Gurgaon as well, apart from Mumbai, Pune, Bangalore, where we operate. So any of your investors at any point, you're always free to come to our office, and it will be more than happy to host you at any point of time. Great. So just a quick snapshot about the entire opportunity. Obviously, we can take the Q&A and go in depth, and you can always reach out to your investment managers in case we miss out on anything. But I'll try to take as many questions as possible right now. Great. How many floors is this? So is it approximately 60K built up? We will own the entire building. Yes, we will. So this is about, so second to 10th floor is what we are acquiring right now. So it's about 72,000, which includes 12,000 square feet of a terrace area, which is also getting leased to Puma, where they're going to set up a sports infrastructure and multiple plans which they have shared with us. So, we will share to investors once the work is completed so that investors can see exactly what the building looks like once we finish the acquisition. But yes, we will be owning the entire building. In fact, somebody we know is the one who is buying the hotel as well. He also happens to be one of our shareholders as such. So it's again going to be completely managed. The entire location, the entire property in some sense would be in our control, and we'll be having more control over this entire management of this property as well. Great. Can you please throw some lights on the previous transaction, the rates compared to the current one? What's the price we're getting at? So we're getting at close to about 5 to 10% discount. As such, typically the property price basis the valuation reports which we've obtained as well is upwards of about, close to about 9,000 odd. But we're acquiring at about 8,000 change, which includes stamp duty, registration, etc. As some. So if you reduce that, it's about 7.5, and our last acquisition was about 7,000. So in a nutshell, we are acquiring at about 9% to 10-ish% tops from our last acquisition, which was 2.5 years back. So in line with how the market rents would be is what it is. Again, this was pre-committed in terms of the value at which we would acquire, and hence we are getting at the similar price for our investors. Great. The rent is going up by 15% every 3 years, approximately 4.5%. So why are we assuming 7% per annum? Purely because, Mr. Sumit, from a rationale, the fact that it is under rented, the market rents in, let's say, HP is about 70, 75. We are at about 59 rupees. In fact, 52 on base rents. So we are super under rented. So 7% per annum as capital appreciation target is the mark to market, that in the event the tenant leaves, and if we are going to attract a new tenant, we would be leasing at then market rents and not at 52, 58 rupees, which is currently as. So hence the 7% is what is our examples what we're thinking. Okay. Great. We have a question from Mr. Nafiz. Is this property built on a lake bed? Because a lot of properties in that area had a lot of lakes. It is not. We have verified that. In fact, it was one of the most important parameters to even look at the contour of the property, because if water rains come, you should not have water coming down. In fact, our property is situated from the main road, situated close to about 5 to 7 meters above the road, which means if there is an uphill, you have to go and then the property starts. So having said that, we'll never have any such issue in future as such. What is the name of the building? There's no name as such. Today we are acquiring the property and it is going to be leased to this grade A global sports brand as such. Eventually the name of the building would come once the hotel is ready as such, and because people would want to call that more from the hotel standpoint. So, we have yet to decide the name explicitly, but we should probably, get back to you guys on what we would be naming once we do the acquisition completely. Again, the idea is to acquire it fully and then we obviously have the naming rights, so we would name the building, but again, it has to be in consensus with the hotel owners. So it'll be an easier player for us to do so. Great. We have a question from Mr. Raju. Why is the investment entry price 30 lakhs nowadays? Strata is coming with big tickets, not catering to all investors. No, unfortunately, it's because the opportunity is about 60 crores. We are allowed not more than 200 shareholders in a company as per law. So 60 divided by 200 is 30, and hence we kept. Now there are investors who put larger checks, but we can't have that estimation, unfortunately. And hence we go by the book and say, okay, 30 is what we should ideally go for as such. Your question from Mr. Vinu: how do you think about the current water crisis going on to play on the rental and property escalation? So how will the property tax to be deducted if it has to be borne by the investor? So the net return, answering your second question, the net return of what we're making is post property tax deduction as such. But with respect to the water crisis, I think it's a short-term phenomena. Every city would have to goes through this situation. It does not have an issue on your rental or property escalation, because the ecosystem is just so large right now and so embedded for one to cut off as such. It's like somebody saying there is a lot of smoke and pollution in north, which means no one is buying properties, no one is moving in Gurgaon or in Delhi because of those inherent pollution issues or traffic issues, etc. So it's a part of any large city is the problem, purely because of no rains or other reasons is why this is a short-term phenomenon. I'm sure the governments are working proactively to ensure this can be solved for. And it will be. It's, in our view, a very short-term phenomenon. Great. Why not increase the rent if the market is at 80 plus per square foot? What yield would you expect to exit as such? Why the seller selling? So this was part of our 2021 acquisition. And this is a part of the 2020 lease agreement, which the tenant had executed. Obviously took advantage of the COVID, and this was a pre-commitment that they would be leasing at particular time. The transaction, in fact, got late by 1 year as such because of certain issues the seller had before he could exit this building and other things associated with it. So hence, this is there. Hence, we do not have the ability to lease at 80. As an investor, if the rent would have been 80, we would have had to acquire at about 10, 11, 12,000 rupees, because that's what a seller would want to sell as well. But given the situation today, because the rents are low, we are also buying at a lower capital value. And that is the most important phenomena we look at when we acquire a property, is that what is the capital value, which is our entry. In fact, if you go to Godrej United, which is which is very close by from our property, just ahead of Phoenix Market City. That apartment alone is trading at about 11,500 rupees per square feet. So, we are buying at a substantial discount from, what market rents of 4 square feet is as such. Okay, how's the rental escalation due to better performance, as you said, of having a hotel around going to be transferred to the investors? So whenever the rent escalation happens, that's when you'll keep getting your rental returns. Obviously, with time, with the new regulations around, we would be migrating your asset into the REIT over a period of time. And hence, whatever mark to market is there, you will always get the better of the mark to market with respect to the value appreciation of your building basis the valuation reports as such. Great. To avoid huge ticket for investors, why can't it be run as two SPVs? Is there a reason for it being in a single SPV? Yes, it is because the property was owned by two SPVs already. So we bought one of the SPVs and now we're acquiring the second half of the SPV. So we could not have the ability to break it down into multiple. It attracts a lot of stamp duty and capital gains as such, which no seller is going to bear it. And that cost will eventually come on us. So hence, we are doing it in one SPV itself and doing this particular transaction as well. How much rent is expected to be deposit per month for a 30 lakh investment? So you'll get access to the financial model. So you could use the financial model and play around basis the amount of money you're looking at investing, and this would be easy for you to get per month. In fact, our financial model even has a monthly thing below. So if you go year on year, you could go on for 15 years as well, and you can see the entire data just below post-tax, post-TDS, etc. What would be the net return you would be making on your investment is also made available on the financial model. Great. In what mode I will get the shares, private placement or rights issue with the SPV? So it'll be both. It will be share transfer and private placement. So share transfer of the equity. There is a bank loan in this particular property. So we'll be doing CCD issuance and buying out the bank loan, prepaying the bank loan as such. So all that has been factored as part of the acquisition cost overall, as part of it. So whatever cost which needs to be paid to the bank, etc., is all factored as part of the entire thing. How many floors is the hotel leasing? So we'll have two tenants. No, so there are two separate transactions, two separate buildings with two separate OCs, etc. Just that they're part of the same campus, same compound, and we share boundary in some sense. But our building has a separate OC, and that building has a separate OC. But yes, there will be two occupiers in this particular property. They will be having ground to 15, the entire tower as such, and we'll have ground to 15 as the other tower as well. All right. Can we exit between in case of emergency? If you don't have a 7-year kind of a mindset in general, first, it's not recommended for you to look at investing because the real mark to market of an opportunity is only when you get the reset of rents, which is like the point which was raised earlier. Why not we lease at 80 rupees and why are we leasing at just about 52, 59? It is purely from that standpoint. If you want to enjoy the value appreciation, that's how you should look at investing. If you're coming in just for rental returns, ideally, you have far better products like fixed deposits, others, which would do it because when we invest in real estate, capital appreciation is the largest bumper which we get apart from rentals. So why let that go or why exit early and let that go as well is the way. The other way to look at like one of our investors who own the existing, like, hey, if the tenant is not moving out for 10, 15 years, I've already recouped my money. And, we can always continue the relationship with Puma if they continue to stick around for another 10 years post that. What is the harm? Where we can, generate almost 3 to 4 times of our money during the lease agreement and an additional lease agreement if required to do. And why would we look at exiting when the location and everything is so good? Because if I exit, I have to put money somewhere. I rather stay invested in the property, which I know very well, and I've had a great relationship working with this tenant and in this building and this micro market asset. So each has its own approach to do so. Considering the REIT regulations are around for our business, and we would be migrating this asset to the REIT, so you will have the ability to exit on the stock exchange respectively. As and when we get the REIT regulations more clearer, and we do a proper session with all the investors around how the migration would work and how your shares would get transferred to your demat account and other things altogether. Great. What kind of agreement is there between investor and Strata? Is it registered? How can notary agreement protect my investment? So it's all through DocuSign, which we follow, and you'll be allocated shares basis to Companies Act. You'll get private placement and share certificates issued. Those share certificates will be stamped and notarized. In some sense, will be stamped, so which is required as per law. We follow that entire process. And eventually, when we read this transaction, so all those things would be sent to your demat account, and on the exchange you'll have the ability to to trade in future if you want to exit that particular opportunity. Great. Sorry, I joined late from Kalavati, so wanted to confirm if it's under construction or ready to occupy. So it's a ready building. Once we acquire is when the lease deed would be registered on the same date, and then the tenant would start occupying the property. Like I said, the tenant already occupies the property, so it's for them to just expand to the existing floors as such and go about the entire trade. I'm seeing a lot of issues on water crisis of Bangalore. I mean, just to reiterate, it's just a very small short-term phenomena. The city has close to about 20 million people staying today. Has very large office, residential micro market. Your city cannot just see crash of property price. It might be a short-term 5-10% delta in certain micro markets, which would happen also for sellers who are little desperate. Are the ones who and buyers who take this as an opportunity, as an advantage, and try to get a discount on their property acquisition. But pretty much it is not going to impact on a long run standpoint, because the government would work proactively to solve this, because the number of occupiers are so many, and Bangalore is not just for India, it's for the world also, because we cater to a lot of large corporates and serving their entire operations from India. So like for instance, one of our investors we were talking to, who manages all the power and energy for, let's say, Home Depot. And from here, they have the ability to manage the entire power of all the Home Depot based out of the US, right? So, need to understand that this is a very short term phenomenon. This might not have a very long term impact in general. And even if it has long term impact, we have to probably see for another 3-4 years for us to understand that, okay, this is now, let's say, like Cape Town, a zero water city, and how will the city then adapt over a period of time is the way to look at it. Is second to 10th floor under construction? When will the property ready? When the tenant take possession of the thing? So the tenant is going to take it's a completed building. They're going to do the fit outs as such. There will be a rent free for 6 months. We factored that in the cost when we have to pay the money to the seller or the developer, and we've kept that with us. So whenever RCD starts, we would get the rent from Puma. But today, for us, we are getting the rent from day one, irrespectively. We are not taking a hit of any month as such from an investment. Great. Normally, you consider 5 to 6 years with exit. Here, you have considered 7 years for exit, so that the average rental yield look good. Whatever you say, the rental yield is a bit low in comparison to other similar assets. In fact, if we exit earlier, we make better IRRs for ourselves, to be very honest, as such. But having said that, why we've kept 7 year is the first asset was acquired 2.5 years back. For us to sell an entire building, exiting would only make a lot of sense. Their escalation is three years every 15% every 3 years. So essentially 9 years from the time, or 10th year from the time they've invested, and 7th year from the time would be the best time for us to exit as holistically as such, to get the better value. Now that doesn't mean that we can't sell our floors and exit. Just that when you sell a whole building, you will always get a far better premium of almost 5-10% vis-a-vis just selling few floors of this particular property as such. And hence we kept a 7 year exit duration for this particular opportunity, and 7% as capital appreciation because of the inherent value at which we are acquiring this particular property. Is there any possibility to raise finance from Mr. Madhusudan for this particular investment as such? Today, no. But going forward, once we'll be having the ability to read as such, you would get your shares in demat form and will be traded on the exchange. So you can take loan against securities in future, subject to banks and NBFCs who are allowing or are able to do so. That is definitely a possibility for you to do so. Your question from Mr. Parag, what are the probability of a tenant continuing for 15 years, and if investor wants to exit before that? You're free to exit at any point of time. As investors, you can always take a decision of exiting the entire building. We don't control when should you exit this particular opportunity. But probability of the tenant continuing for 15 years, very likely, because we are acquiring for about 7,000-8,000. The tenant has invested close to about 5,000-6,000 rupees per square feet as interior cost, number one. Second, what the tenant has also done has made that as their registered address. If you go on Ministry of Corporate Affairs or Zovacop, the address you see is the address of the property. For large corporates, changing the registered address, GST, moving the corporate headquarters, etc., unless space is a very large constraint, is when they would look at moving out. Ideally, the tenant was looking at occupying only about 1.2, 1.3 lakh square feet. They are taking additional 20,000 because they get control of the entire building and they don't want any other tenant to just be there for another floor or so. So they are enough and well capitalized. Even if they envision another 15 years, they might not need a space beyond this, is our estimation. But having said that, we are confident a 10-year at least vision this tenant would stick around in this particular property. What is the amount of rent expected post TDS? So you can please feel free to use the Excel sheet and you'll get the idea. Which hotel is coming up? So Hyatt Centric is the brand, the four-star hotel, a business hotel with the proximity around the closest hotel in this vicinity is about 5 to 7 kilometers, which is your Zuri and Sheraton in Whitefield and about Radisson Blue in Marthali. So there's no, and MG Road again, where your Hyatt Park, Taj, Oberoi, etc. come in. So you're talking about a good 5-7 kilometer radius on either side with no four-star hotel proximity as such. So hence it's going to be a blessing in some sense because of the kind of hustle and bustle this location will have over a period of time as such. What is the timeline to purchase the property? So we are looking at subscribing and closing. In fact, we are almost close to subscription as such. So we are looking at acquiring in this financial year if there is a possibility. Is going to be a best scenario because we don't have to register the property. We just have to do a share transfer. So we are hoping we'll be able to do so in this financial year. Otherwise, first week of April is the tentative, or second week of April is the tentative plan when this acquisition happened. Obviously, subject to receipt of the entire funds as such. If new constructions coming up within the vicinity, how is it going to impact the real estate price after 7 years, say? Today, there is no vacancy in this market, barring one property, which is MFAR Wilshire property. As such, because the investor which owns that property has a very high expectation in rents and hence they've not leased. HP, which is not into a leasing real estate business, leased their entire 500,000 square feet in just about 2 to 3 months as such, right? So even if new construction does come up in this vicinity, enough and more takers are today there to do. What we've been told is close to about 400 to 500 GCCs are looking at entering India, and Bangalore would get almost 40-50% of that. As such, many corporates even look at setting up 2 offices for business continuity management or 3 offices, which is Hyderabad, Pune, Chennai as your second priority, and Gurgaon, Bangalore as your first priority for most of these occupiers. So hence, we don't see issue. In fact, new construction comes up is only going to keep enhancing the rents with respect to mark to market, which will give a sense of what our asset value would be, when we would like to exit as such. So we're saying the entire question from Mr. Raju. So we're saying the entire premises comprises of one which will be rented to the tenant and one the hotel, or is there more offices available in this premises? No, that's the land available. That's the building which is there. There's nothing else around it. On the other side is HP campus. On this side is DNR Casablanca, which is an apartment complex, again fully sold out as such. So there's nothing within or enough land available for us to do anything. There's nothing else as such. Who's the 11th and the 15th floor occupied by? It's occupied by the same tenant who we are leasing the second and the 10th floor to. So it's the same sports brand company which is which is occupying the entire property as such. Okay, we have a question from Mr. Hans. Is the trend towards work from home likely to impact occupancy over the next few years? Very unlikely, to be honest. Last year saw highest leasing demand, and this year also was going to see another record-breaking highest leasing demand. So it's not really impacting. There are few corporates which have completely migrated to work from home. Few are doing quasi, and few are not. So it's a matter of time, but the demand is increasingly high, irrespectively for more and more companies wanting to set up their operations. The US keeps printing more dollar, India becomes more cheaper as such. So obviously that's also another parameter why a lot of the jobs would look at migrating and would consider having an India office for the tech development as. Why is the existing owner selling? So obviously he needs funds. He will be owning the hotel as well. So he's going to continue running the hotel along with somebody else. So it's going to be joint ownership on the hotel entity. So there are a lot of debts. This gives an opportunity for him to come out of the debts and look at starting clean or starting something which is more rewarding in general as such. Is the investors of Bangalore Opportunity One getting the same rent, or is it more or less the same? It's more or less the same. There's no difference from a rental standpoint to the investors as such. Obviously, is a little higher comparatively to the existing opportunity as such, because the escalation is due for this opportunity in October 24. And in this, we've already factored that in this. So more or less, the rent per square feet is going to be aligned to what it is for the existing opportunity as such. Are there any metro stops expected in the next few years in that area? So there is already a running functional metro station. Whitefield just announced their metro running about 4 months back, if I'm not wrong. So there is a metro station. Unfortunately, I'm not able to pronounce the name properly, but it's Singasandapalya is the metro station which is there, or in a better sense, metro station closest to Phoenix Market City. So it's an operational metro station which is there right now, is what it is. Okay. Are you introducing REITs from Mr. Abhishek? So we've got the recent regulations from SEBI where most of our existing property would also have to get migrated to the REIT. It's an option, obviously, subject to investors' consent. But having said that, you will have the ability to make better returns for yourself. Today, in our ecosystem, because it is unlisted, the taxes is 20% on long-term capital gains with indexation benefit. When you read it out, it will be flat 10% for because it's a listed security asset. So that is what, and again, mark to market would happen on real time basis vis-a-vis, how rents escalate and with every 3 years or every year or whatever. REITs would give you a stock market pricing in some sense, which will have a mark to market as such. So that will be the other way to do so. We have an anonymous question. Is the opportunity still open? I was unable to express my interest online. I think we've just subscribed this morning because we offered this one day before for existing owners for them to also subscribe to this. This was again pre-committed. It was actually something which we had committed that whenever we get the additional floors, we will offer to existing owners also to look at subscribing first, and then we will open it to others because it is their building at the end of the day and they should have the right to own that before we open it to other investors to participate. But if not, just reach out to us if there's any back out in the event. If it's subscribed, we will have you accommodated at any given point of time. As this is an existing property, are there any repairs and refurbishments expected? So whatever is there, we've done a very thorough technical due diligence. That report again would be made available to investors post acquisition. So all those costs of any nature has been already factored in our gross purchase price, and we made the seller as condition subsequents, condition precedents do a bunch of these things, which would ensure that this happens. And typically, the main repairs and maintenance are the ones which is done before the acquisition. Let's say because they're acquiring phase two, the tenant came back and said they wanted more power, they wanted an extra DG as an N+1, etc. So all those were preconditioned, have been taken care of. Normal wear and tear gets covered with your common area maintenance, which the tenant pays on top of this to handle these small and wear and tear costs in general. Typically, your larger refurbishment costs happen if your building is 10, 15 years plus, and you have to change your HVAC or HUs in general, is your largest cost which can come, which has happened in one of our particular properties as such, because the spare parts for that particular model is no longer available, is discontinued by these large incumbents, whether it's Blue Star, Dakin, Voltas, etc. So hence, then you have to upgrade into newer technologies, which is also efficient in some say power saving also, etc. Then you expect, and then it has typically a 10, 15-year minimum life span as such, what it is right now. But otherwise, in this, because it's a relatively newer building, we acquired in 2021, it was a new building then. In terms of the entire refurbishment happened at that point of time. It was the first occupier in this particular building ever since the building was ready. So everything has been done. And this tenant is not a small tenant. It's a very, very large company. does close to 3,000 crores of business in India and close to about 5-6 billion across the world. So they would look at these compliances and would ensure that everything is as per norms and as per the standard which is required to be maintained as such. What is the TDS for NRIs? It's going to be 20.8%, if I'm not wrong. That is the TDS which would be deducted for NRIs, subject to you giving us your TRC. And basis that then you'd be treated domestic. Otherwise, for NRIs, it's what is as per law we have to manage as such. Okay, we have another anonymous question. Will there be a double taxation impact on the rents received? And after 5-year lock-in, does the rental per square feet be revised aligned to market price? So there will not be any double taxation on the rent received. So we apply for low withholding certificates for our SPV. So whenever the tenant pays, they deduct a very small percentage basis what certificate we are able to get, either from 0.1 to 2% typically they would do. So your returns would never get impacted. In the event of any shortfall, it will be covered part of our management fee and which we will recover once the TDS and income tax refund comes as such. Answering the second question, will there be a reset of rents after 5-year lock-in? No. Reset of rent is after 15 years. So if the tenant sticks for 15 years, we have recouped almost 1.6, 1.7 times of our investment in the rent already. And if there's a mark to market at that point of time, then at that value, we'll get higher rents going forward as such. Great. When is the rent starting? Rent is going to start from 1st of April. Whenever we make the acquisition, let's say we acquire by 4th, 5th, 10th, whatever, pro rata, the rents would also start as such, but the rent starts from day one. Can I get the legal documents of the building, RERA approval, OC documents, etc.? Yeah, everything is available. We'll have everything circulated to you. Feel free to reach out and we'll have everything. RERA, I don't think so is there for this particular property. But if not, because it's the first sale post acquisition, so it's not technically required. And it's a completed building also on top of it. But having said that, all the other OC, fire, NOCs, and whatever is required, all this is available on our legal folder drive for you to have access to this. Okay, we have a question from Mr. Nizam. Who was the previous tenant for the space with the seller SPV and what was the average rent per square feet? There's nobody. The property was empty. It was a ROFR for the existing tenant when they had signed in 2020, started paying rents in August. So effectively, that is the same tenant which has occupied. Just that the acquisition got delayed by 1.5 years from the time it was envisaged because the seller went into certain bank debts, which was difficult for him to come out of it, etc. And finally, there was some kind of a settlement with the bank eventually through because of which we are now entering and we are able to acquire this particular property as such. So there's no tenant been there ever since this building has been erected. As such, again, these are those old COVID faults which have happened where many owners have had to face some issues or the other because of COVID and its impact at that point of time. Which all floor does occupy currently? Is the basement ground first? Can we visit the property and see it physically? Yes, so we will be organizing a site visit once we acquire the property for all the owners which will be owning the property for them to come see this property as such. We've requested that to the tenant as well, and they've been kind to allow because many tenants do not allow. Let's say we have a property in Hyderabad where we have one of the largest banks. They're very clear you cannot enter the property no matter what. Even for when we have to get our yearly valuation certificate, things they do not allow us even then. We have to always stay outside, click whatever we can outside and then do so. But this tenant has been kind. They said, we'll get back to you when you could, and then you can come see the property. But eventually, once the hotel is functioning, you're always free to enter, see the property whenever you want, probably have a coffee at the hotel, etc. at any point of time. What kind of expenses is done by the tenant typically? Tenant on furniture, fixtures as percentage of capital value. So in this particular property, because the tenant is a very large multinational, they've almost spent 70% of whatever we are going to invest as their investment in this particular property. And that is the typical trend. Most of these large occupiers, let's say a group like an Apple, would have an investment of interior per square feet anywhere between 7,000 to 8,000. They are going to take the best of best furniture like a steel case or etc. Each chair would be about 1-2 lakh, 3 lakh rupees, etc. And they obviously need to put in about 400,000 to 500,000 chairs. This is the number of seats they're taking. So basis tenant to tenant, but on an average, any tenant spends anywhere between 2.5 to 3,000. Very conservatively, that's the money we spent when we moved into our office, and that's the typical base which one does for a decent office as such. And for somebody who does, has larger aspirations or is very profitable, ends up spending 7, 8,000. This particular tenant is spending anywhere between 6 to 6,500 rupees per square feet. So, in terms of investment, you're talking about 80 crore to 90 crore this tenant would have invested in this particular property, where our total acquisition, phase one and phase two put together, is only about 120 crores as such. So, that is the trend you're going to see in this particular property as such. Great. What happens if the tenant withdraws in between whatsoever reason? So they will have to pay us rent till the lock-in, irrespectively, as such. So nothing changes. They even if they have to walk out before, they'll have to pay us the lock-in rents for 5 years, irrespectively, at any given point of time. Great. We have a question, Mr. Gaurav. Why Pune shows fully funded when Strata dropped one LLP? Minimum minister of Pune was 25, but now shows 30. The Pune one would be 25. I don't think so. That has changed. But why this SPV was one dropped is again because we have to migrate to the REIT entity. As such, the existing LLP can get converted into for one of the LLPs, but one of the LLPs which we couldn't, it was a private limited which got converted to an LP, and then converting that again to private limited for us to read is a very challenging aspect, and hence we decided to drop one of the floors, and we only acquired one of the floors in Pune as such. That was the reason we had subscribed that particular property eventually with our underwriters as well. But eventually, because of the REIT regulations which came 2 weeks back, we had to drop out one of the floors and offered those investors to take a subscription in the Puma deal as such. Okay, what are the benefits of owning an entire building versus a single floor? The benefits is easy because in that micro market, especially Outer Ring Road, Mahadevpura, the tenants who come typically come with 1, 2, 5, 10 lakhs square feet kind of facility requirements. Leasing one floor 9,000 is going to be difficult in that particular micro market because it's not like a CBD space where somebody is looking and the rents are high, somebody is looking only for 5,000, 10,000 square feet. These are predominantly HQs, back offices, GICs, GCCs, and they look at anywhere between 50,000 minimum to about 10 lakh to 20 lakh square feet as well. Like large campuses, like large occupiers like JP Morgan, Cisco, Goldman Sachs have upwards of 20, 30, 40 lakh square feet as well. So when you have an entire building, it gives more control for an occupier that, okay, there's nobody else except me as well. So I can do what I want. I won't get disturbed by another tenant, or some tenant creating a nuisance would not have a nuisance to them. Bunch of these things go on in these things. Like for instance, in one of the assets, we know of, smoking is a big problem, which many tenants are having a facing issue because one of the companies runs a 24 shift, and it's a very very large problem because of the groups which gets created, and it creates a lot of nuisance around. So if you own the entire campus, you own the entire building, there are these smaller asset management issues get solved and you have greater control. If you want to implement certain additional things, let's say a tenant tomorrow decides to have valet services for its employees to come in, all that is going to be much easier for him to operate because he could park the way he want to, even if designated parkings are this, if he wants to park in, let's say, additional 5, 10, 20 cars, subject to him able to manage the entire parking in some sense. A lot of inherent benefits a tenant typically gets in this particular property asset. Great. Is there any patent, trademark, registered intellectual property as part of the deal? No, Mr. Arun, there's nothing. The company has no other business except owning the building. In fact, no other financial transaction also as such. So there's nothing which we are getting as part of the deal. As such, we even got a question: will we get any discount from the tenant? Eventually, we haven't initiated. We typically avoid something like that because when, let's say, if I have to buy a shoe, he might give a 50% discount. But if a tenant comes and asks me for a 50% discount on rents, it will cost me 100, 500,000 shoes as such. So we don't typically engage unless the tenant is welcoming and is calling us in that nature. But we do not entertain such favors in general, because the favor when the tenant would ask us would impact us far more for smaller favors we may want in return for them. Okay, how old is this building and when was this built? So the building was ready by 2019, 2020 as such. So it's about 3.5, 4 years old right now, the building. But considering it's going to be occupied now and everything has been invested in 2020, 2021, whether lifts, all the fire norms, the new chillers, HVAC, whatever it is required, DG, etc., and all have a 15-year life irrespectively. So it's relatively new. And the additional floors were never used. So effectively, the building has never been at full capacity. So you will not have, the building aging out or the equipment's aging out at any given point. All right. We have a question from Mr. Digvijay Jain. Hello. How can you tell if it is managed, if there's any damage to the property like fire or something? So we take insurance for the property as such, and our asset management team visits every quarter to a half yearly basis to see if there's any issues. We have regular contact with the tenant and it's especially their admins to understand if there are any issues in the building as such. So that way we are able to get real time update about anything which happened in this particular property. But fire, other things are are a cause which can happen to any building. To protect that, we can only take insurance, apart from putting all the fire sprinklers and fire norms which is required as per law, which is always done for all the buildings which we buy as such. We have a question from Mr. Anup. Is this a land freehold and any free of any other concern? So yeah, it is freehold. Like I said, there is a bank debt today. So we have received the NOC from the bank. So we have to pay the money to the bank and acquire the property as such. So there is nothing else which is required. Again, a great thing that bank has also done its due diligence in some sorts, which gives us a lot more comfort apart from the due diligence which we had conducted, and we've done a top-up due diligence from the time we acquired in 21 to 21 or 22 from till now. Whatever has happened, we've taken a due diligence about that as well. Great. Can you just explain what is the terrace space which is leased at a different rate, or is it just open space? Will that be constrained as an exit to new tenants may not require the terrace space as such? So the terrace is very small. It's 12,000 square feet for the entire, so it's sub 7-8% of the entire property in general. And the tenant is paying only half the rent. So effectively, only on 6,000 square feet, the tenant is paying rent. And the terrace is on top of the first floor as such. So it's like a building which protrudes out as ground and first, then it cuts. So the floor plate for the first floors is about 15,000, and then it's about 9,000 square feet as such. So the area of the terrace is what is getting out, and the other floor is like that. So we'll always get the ability to leave that because it becomes a great recreation area for anyone to consider having, and it's not very common to get that. So we're not talking about the terrace on top of the building because that's where all the chillers and other things are maintained. You can't really use that. But this is an open area space rather, which the occupier has multiple plans on how to use. In fact, they wanted this as part of the deal, no matter what, as such. This might also have a connection to the hotel, to the coffee area as well. So there are a bunch of integrations because of which we don't see any tenant not wanting in future as well, this particular property as such. We have a question from Mr. Rezam. Whenever we go with the REIT mode as specified by SEBI, will each SP would be treated as a separate REIT? Yes, absolutely. The way SEBI has envisioned the REIT is they'll give us a license and every property will be an individual REIT. So your returns will be limited only to that particular property. Your returns will not get clubbed with other assets which you own or we own via platform, etc. So it'll be very specific to your property. Each and every separate listing is what will be the way SEBI is envisioned this particular opportunity as. Great. We have a question, Mr. Prashant. There is additional reserve which is added in the investment, so the interest from that goes to whom? So we park that in interest. Again, that reserves also we that interest also we park that in reserves as such because it's 22 lakhs. At max, we get about another 1.5 lakh rupee a year. The idea of keeping reserves is if there's any wear and tear at any given point of time in any building, we are able to use that. In one of our properties, we had a similar situation due to rains. There was certain impact because of which we had to invest about 1.5 lakh rupees per floor for each and every owner. While we owned only one floor, but it was a society decision. So we use that reserves to keep paying and we intimate our investors in the event we use the reserves at any given point of time as such. Okay. Is the Bangalore opportunity already fully subscribed? You mentioned something on those lines, but I don't see on the Strata website. So you can go on the Strata website and list it. The way the function works is while you can subscribe, but the funding timelines are met only once the money hits the account. Otherwise, the opportunity is still open. Considering today is a holiday, and I don't know if banks are functioning tomorrow. If tomorrow is also a holiday, money most likely can be transferred only on Tuesday. There are limits which banks have imposed on holidays. Let's say HDFC Bank does not allow you to transfer more than 2 lakh rupees on a holiday per day. So there are other rules. Once we get the commitment money is when this opportunity gets fully 100% subscribed. But currently we are making certain changes to be ready for the REIT regulations, and hence you may have certain lag with respect to this because we are getting equipped for the larger migration and building our infrastructure around the same as well. All right. Since there was no tenant previously, we have a question from Mr. Nizam again. Since there was no tenant previously for the space, why you went to whereas you could have gone with other new tenants for your existing portion appreciated as such. We could not have because there was an existing lease agreement already part of the transaction, and they were very particular. They want the entire building as well. I'm an asset manager first, which means if I can't piss off my tenant for the building I already own, then I had already committed, and it was part of the transaction in 2021 itself, right? So while we had a lot of offers and temptations as well, but the first right always remains with it's a business relation which you always have to maintain as part of asset managers to ensure your tenant is happy in your property at the end of the day because I'm in the business of collecting rent for my investors. So in the with the hope of making certain extra bucks, the idea was more to give to existing tenant and have him more sticky into this property and have him to buy in more into the property is a better investment call rather than giving it to somebody as such. And for them, it's also contiguous floors, right? Because they own ground first, and that is the only entrance to the property. Otherwise, the entrance is only from the basement. Also, was leasing to another client would have been a little difficult parameter in general. We have a question from Mr. Anand. Do you think the investment can be traded on the exchange soon once the SEBI regulation kicks in? Yes, absolutely. It is not going to be as freely tradable because the lot size is going to be 10 lakhs, just another Infosys stock in general. But yes, you'll have the ability to trade through the exchange itself. Okay. Fire lock-in starts from April 24. Yes, absolutely. Regular maintenance expenses will be borne by the tenant or the SPV. It will be borne by the tenant. The tenant's common area on top is another 10-12 rupees per square feet, which is for them to, take care of all the security, electricity bills, renewals of any licenses, certifications which is required. All that is part of this as well. We have a question from Mr. Manikanta. Do we get any UDS land allotted like apartments? Yes, we will. In fact, a society is also going to be formed. It is part of our agreements as a condition. Once the hotel is completed, because there will be three owners, our first SPV, second SPV, and the hotel SPV as such, or the entity which owns the hotel. So three of us will be forming a society for the UDS and general maintenance of the property as well, which will be maintained by the hotel for now. But having said that, it's something which our tenant wanted that the hotel will only continue managing the property. But the UDS is already allotted, but it will be a part of the society over a period of time. Okay, post-listing, will the monthly rent be taxed at a lower tax rate? So there are two ways, Mr. Shankar, how taxes would be envisioned. So currently it will be taxes at the same, whatever rents which we are getting, will be taxed at your same hand. SEBI is going to give us an option later for us to choose the tax regime, either pay tax at the company level and distribute dividends to investors. So if you're in the 10-20% bracket, you'll still end up paying extra taxes. Or the other way is what we follow today. Whatever rents we get, we distribute in the form of interest on a month-on-month basis, and you pay taxes basis the tax bracket which you fall under as such. And your LTCG, which is today 20% with indexation, will then move to 10% or 20% with indexation. So that is a right again. However, how listed securities are taxed, that's the same way you will be taxed as well. Nothing changes for the investors in general from a taxation standpoint. But today, if you invested 30 lakhs, you want to, let's say, exit 10 lakhs tomorrow, retain 20. Post listing, you will have the ability to exit 10, 20, 30 lakhs, whatever you want to. You'll have the ability to exit as much as you want, subject to the lot size, which SEBI will fix it up. You will have the ability to exit certain portion and not fully. Today, investors have the option to only exit fully, which post listing will become an easier norm as well, that you can partially exit as well at any given point. Great. I'll just take the last question from Mr. Kethi. Post the REIT listing, will we still have the option of exiting the building by selling the building as such? Yes, absolutely. There are clear delisting norms and property norms which are there as part of the regulations, which again is always through through majority investor consent. So similar to what we have right now, as such, so similar approach is what will be there for everybody else. Great. I think I missed a couple of questions. I'll probably just answer that. Okay, we have a question from Mr. Piyush Khaitan. How easy is it to exit the investment after the lock-in period as such? So again, depends on how you look at it from a return standpoint. Typically, any new buyer would want a fresh lock-in because we'll have good relationship with the tenant. We can always ask for a 2-year or 3-year lock-in by giving some discounts here and there. So exiting after lock-in by getting a fresh lock-in so that a new buyer sees his investment also being as protected becomes relatively easier from that standpoint. But without lock-in, even you may not want to buy a property. If I had a property with no lock-in as such, you will say, hey, the tenant can leave tomorrow. What safeguards I have? Is a similar question somebody may also have at the same time. And hence, in this particular transaction as well, we may have to request the tenant for an additional lock-in for 2-3 years or 1.5, 2 years, and then exit this particular property as such from a return standpoint. But considering it will be listed, you can still trade your units when you want to exit, basis your investment timeline and the time frame you considered. Our recommendation would typically be a 7 to 10-year time frame in this particular opportunity because it's a solid location and it's a solid tenant we are talking about as such. So looking at exiting early is probably not prudent as such. While I understand from an IRR standpoint, the longer we stay, IRRs dip a little bit, but it's a call you have to see basis your financial plans and financial goals that how this is meeting those particular criteria. Okay, I'll just take a couple of last questions. What is the nature of the SPV? Is it an LLP or a private limited? It's a private limited. It's called TerraWave Dash Private Limited. I forgot the name, but that is the entity, TerraWave Projects Private Limited. So that is the name of the SPV which we're acquiring. In SEBI, when we have to list, everything has to be a private limited. So whatever LLPs we have also will be converting. We in fact only have one. We'll convert that into private and then we will list that particular opportunity as well. So obviously subject to tax and other things we move forward. Okay, since KD2 is available at the similar price of KD1, can we say there's no appreciation yet? It is not. In fact, we are acquiring the second opportunity at about 10-12% from our first. So the first ones have obviously made their appreciation as such, but the second ones are buying basis the market rates are at buying at a discounted, which is why existing investors were offered 1 day in advance, 1.5 days in advance for them to come into the opportunity because you know the entire opportunity for them to subscribe. And it is prudent because you own the building for you to get, because we're getting at a little discount than markets, for you to own more in case you would want to. But in case you want to diversify, it's completely your choice. Hence, we gave that heads up to existing participants for them to subscribe to this particular opportunity. Great. Thank you so much, everyone, for taking out time on a Sunday. I hope this was useful. In case we missed any questions, just write to us at hello@strataprop or reach out to your investment managers. And, we'll be more than happy to answer any questions you have. In case we have subscribed this particular opportunity, you missed out. We have 2-3 deals which we're going to roll out in the coming week and weeks after that. One of them is going to be a large healthcare opportunity where we're going to buy a hospital. It's our first hospital deal, which we're going to bring out as well. So, stay tuned for all the exciting opportunities which are coming up. Thank you again. Thank you for your time.